This is Justin for Thursday, September 8th, 2022, taking another look at SPX. A couple of key things I wanted to look at. So you can see here I've got the 4,000 call and the 3950 put expiring today, earlier today. And we crossed through those prices at a couple points. I mean, this was just like once, but then a couple times here and then bumped up against the 4,000 and got through it there. So you wouldn't necessarily have known that at the start of the day, but we opened up here, had a little bit of a gap down. It ran lower, ran way past yesterday's high and rolled over. And this rollover is one key area where we had some of these bull candles closing below the 10. And just looking at what you could have done here potentially was getting into a put anywhere through here very inexpensively. Let's actually turn this off and I can see what the price was because I can't even see what that price is. So buying something for like $1. Okay, maybe not exactly $1. Maybe the low was $1. So right here, now we started to move, line up the candle. So that was up here. So we broke down, put a bull candle sideways, and then you got to get triggered on that candle. That would have been a tough one. So probably getting an entry set up to buy around 2 and a stop down at 1. That would have been comfortable. That would have been $100 risk. If it moved too quickly, it would not have filled. I do like having this really small bull candle, and let's zoom in on that because that is an amazingly small candle right there. You can probably tighten up your setup. Yeah, look at that candle right there. So we're already looking bearish. We have a bull candle. Is this a tweezer bottom? They're 7 cents apart. This candle triggers that one. Then you get this small one. This candle triggers that one. Oh man. So, and these are 3-minute candles, right? Yeah, 3 minutes. So let's go back and look at that put. You really could have bought right above this candle. So like $1.85, $1.90, definitely 2. Definitely buy it 2. Stop down. Probably 140. I wanted to say 150, but probably buy it 2, stop at 140 or a little further down. So comfortably losing less than a dollar per contract. And then you're triggered in. Hopefully it fills on this candle, or it looks like there's a lower wick on this candle here. Not sure if that's a real wick, but let's see where that went. Where would the target have been? Target would have been some of these bull candles over here, back around the low of this candle. So target would have been around 750. Possible to get filled on this wick if it's real. I don't even know if it's real. And then it ended up running all the way to 12. Wow. It was a pretty sharp sell-off. Not sure if there was some news, something that caused that, but it doesn't so much matter because we're just trading the chart. And this is a really great setup for the bearish 10 EMA trade on the 3-minute chart. There were some opportunities to go bullish. There was a bear candle closing over the 10 here, so you could have actually gotten in above this candle right here on this one. This candle, it's iffy. It's a really nice hammer. You could have gotten in bullish right above that one. So let's see what that would have been a setup for. So at 912, actually, I don't think it closed. No, I don't think it was high enough yet to trade there, but at 930, so this is right around 930. So yeah, so 930, now we're into the market, you're good. So looking at a call at 930, what would the setup have been on 30? That would have been getting in, it's kind of expensive. So you're getting in at like 7, and a stop down at below 5. So that would have been like a $200, $300 risk, something like that. Totally doable. Or you got to go further out of the money to get something down to $100 risk. So probably the 40-25 would have worked. Let's look at that real quick and we'll come back to this one. I do want to look at this one. So at 930, we're looking at getting in for $2, stopped in at $1. That's easy. And then it runs to 5. So trailing up your stop, get your stop to break even at 2. No, not right away. I mean, once this bull candle comes in, probably get that stop at 2, so you break even, and or at least 150, lose a little bit less. And then, targeting an R would be 3, 2R would be 4, and we ran up to 5. So I think that's pretty easily, as long as you're slow to move your stop, it's pretty easy to get 2R, 3R on that one. So I'm going to go back to the 40 or to the 4,000 instead of 4025. And we're going to zoom back in on this because right at the end of the day, we had a bit of a rally from very inexpensive. So I was talking about the video yesterday where I traded, got into a contract for $25, so 0.25 on the contract. Today, this candle made it down to $30, not 25. I didn't have an order set up here, but right into the end of the day, this is something you have to practice. You have to check your motions. You have to make sure your internet is good, that nothing is going to go wrong if you place a trade this late in the day. But I love these because the direction is pretty well defined. The risk is incredibly low. So right here, we had retested with this bear candle right back into this hammer. We had previous support, previous resistance. Here, let me draw these in. So this is what happened at the end of the day. Previous resistance, took it out in that candle. Came back as support, came back as support with a really nice hammer, came back as support. So right here, late in the day, it should bounce here again. Probably it should. Even though it's made a lower high here, it's still holding the lows. Right? That's what you expect. It's supposed to hold the lows. Now, yeah, it could take this out, and what do you lose? $25 a contract. So, risk something small. Maybe smaller than usual, maybe a regular R, but the potential is huge. And this is the same thing I talked about on Amazon for a long time. And so here's the setup. Just buy at that level, buy for $50. This one only made it down to $30, wouldn't have filled at 25. Well, can't say that because you didn't have your order in. There's no print on the chart, but if there was an order in, could have filled maybe to buy, but definitely 50 would have filled, right? And then just set a target, like for it to move a little bit. Buy at 50, sell at 1. Buy at 50, sell at 2, whatever that is. And you're not going to sell the high. And really, you don't want to be holding into the last minute. Last 3 minutes, maybe. But you got to get some good practice with that. And like I said, make sure that the internet is completely good. You have a backup. You have anything, like set a target, be ready to be out, flatten whatever your order type is from your broker, because you do not want to be holding something that goes into the money right at the end of the day, because it didn't look like it was here and it's 15 points away, but then it goes into the money. This is the same kind of movement, same kind of end of day rally that I saw on Amazon a lot of times, but particularly on Fridays, and have made some money on that. So we're going to be careful here how we trade it, how we set things up, and getting out of it early enough. A good target, as long as you can watch it, a good target would have been, these highs. So we're looking to have this same setup. Maybe you didn't buy there, but resistance here, maybe you bought here, didn't quite make it to that same resistance, and then comes back here. It's like, well, it's not a place to buy. Maybe it'll get, and it got there, right? So this is just channeling here. So this end of the day, completely sideways. I can even come back to there, and okay, we got from this price to that price. And let's see if we can see back over here. That was kind of the same resistance we ran into right there and there. And then we got through it, and then stair stepped and continued higher and pushed past that level, and then that level coincides with where we had some stair step to go back down. So all this is just candle patterns and signals and things that help us set up, take the emotions out of it. What are we seeing? We're seeing a bull candle close below the 10, another one. This one triggers right here. This one had triggered right here, barely. Actually, probably this lower wick would have triggered it better. And so if you're quick, you could have gotten in here with a stop up here and then gotten another entry here with a stop, a tighter stop, or keep that same stop. Add to the trade because it, or do half an hour if you wanted to wait on it from here. But anyway, there are some ways to do this, and having an explosive move like this looks like what we had on Friday. Very directional, very quick, and you kind of had some signals saying, hey, it looks like, maybe we're going lower. This looks kind of like a double top through here. Definitely didn't get a retest back up into the neckline, but that looks like a double top to me. You gotta squint a little, right? So be patient on these. The option's going to lose value. So like the whole time it's doing this stair step, it's going sideways. So the put right here was losing some value. It came back down. This is really annoying to look at this one. Let's go. Okay. So here's the stair step. So we ran, and then it just chopped around, losing some value here. Allowed the RSI to rest, give you another opportunity to get in because the RSI had rested, but it's had that move. Here's the double bottom, and then a rest, retest, about the same thing. So anyway, that is how you could have traded this bullish and bearish with the 10 EMA, with options expiring the same day, and options that were really about 50 points away from the open price. So this was from 39.60 going up about 40 points, going down 60 points. So about 50 in each direction. So kind of splitting the difference for where the open is. That's what I'm looking at. It's still, I'm just studying this, and I'm just sharing what it is that I'm finding. There's some same day expiring options that work better with 75 points away versus 50 points away. It helps when it's a nice solid number like a 50, a 25, a 75, a 00. Very similar to how I was tracking things with Amazon. So if you're new to this, new to watching this, go back and watch some of those Amazon videos back before the split. And actually, I have not turned any of those public since after the split. There were ones where I was just like trying to get a feel, like, how is this moving? It's very different. And frankly, I just didn't like it and didn't want to be posting things that were not as clearly thought through, clearly as experienced as it was explaining things when Amazon was much more expensive with the before the 21 to 20 split. But here we are. We're at a we're using an index that's very similar price and has even more options, and excited to see how this is going to go. Hope this helps. This is Justin looking at SPX today, SPX options. Thanks.